On today's episode, we are going to take a look at two stocks that I believe are a great buy for me right now. The first stock is one in the gaming industry. This is a market I am very bullish on, and this company has lost about 50% of its valuation compared to its all-time highs. The second company is a brand new growth stock that is hitting the high process computing market. And I did purchase both these companies recently. And before we go any further, I do want to say I hope everyone had a great holiday. I was away for some time, but I am now back on the grind to make more videos. For each of the stock I mentioned today, I will do the following. First, we're going to take a quick overview of what they do, take a look at some of the recent news, then we're going to take a look at some of their financial outlooks, and finally, I'm going to end with my thoughts and some of the risk and rewards I'm seeing in these stocks. Like always, welcome back to the channel. I'm Jose Najarro, a self-taught investor. And before we start, let's make sure to smash that like button. It helps so much with the YouTube algorithm. And if you want to know when I buy or sell stocks, on the description and the pinned comment, you should see a link to my Discord channel. It's free to anybody that wants to join, and all my other social platforms. Also, don't forget to get your free stocks on Webull. If you sign up using my link below and deposit $100, we both get a free stock. Sometimes they do specials where we might get 2 or 3 free stocks. Finally, if you want to learn more about becoming a better investor, make sure to check out my Patreon. I release a lot of educational material there. All right, so the first company we are going to take a look at is CD Projekt Red. Many of you guys might know it from the creators of Witcher series. They also have they also have a few other games. The other main game right now is Cyberpunk 2077, and they also have some other Witcher series games, some of their card games, and some other adventure games right now. But the two main ones are The Witcher 3 and Cyberpunk 2077. So this is a Polish company for those that don't know, and right now it is traded under CDR in the WSE market. But if you are like me, you can trade it over here in the United States in ticker OTGLY, over the counter markets. So right now, CD Projekt, if we can see, it is down dramatically from its all-time highs. Here in August 27th, it is down about 41%. If we take a look at just recently in December 4th, the stock price was at $31, and it also dropped. It's down about 41% compared to those highs as well. So right now, CD Projekt has a market cap of about 27.1 Polish zlotys, I believe is their currency. And if we convert that to United States dollars, that's about $7.3 billion here in the United States. We can see this is probably one of the smallest gaming companies that I've ever looked at right now, with such, at the same time, this is a company that doesn't have many games. It's not like the EA, it's not like Activision, it's not like Ubisoft. Right now, they only have two major games, that Witcher series and this Cyberpunk series. So why has the stock price dropped about 50% from almost 50%, right, from its all-time highs? And that is this Cyberpunk game that they just released. It came out in December 10th of 2020, came out with some bugs. This bugs has gotten the game to get a nice amount of bad feedback and reviews in the social platform. Sony has actually pulled the game out of their digital store because they just received so many refund requests that right now they decided, hey, let's pull out this game out of Sony. And investors are obviously not liking. This is probably one of the worst game releases ever. And this is that Project Cyberpunk was actually delayed because of major bug issues. But on the bright side, I'm also seeing a lot of gamers on Twitter and all the other social platforms saying that these bugs and all this crazy nonsense is being overreacted, that the game is still playable, is still doing good, and most games right now, when they get released, they come out with some bugs, and these bugs get fixed over time. So there's a bunch of gamers saying that, hey, even though, yes, they are bugs, they're minor, we can still continue to play the game. And there's others that are saying, hey, right now I'm not enjoying the game and let me get the refund. So that's what's really driving this stock price all over the place. And I do believe it's going to continue to have a volatile stock price, especially because recently investors are now suing CD Projekt just because of the way they're releasing this game. They're saying it's not the best thing for us investors. But if we take a look at this best of 2020 games hosted by Steam, we can see two things. First, the top sellers. This is the year's top 100 games measured by gross revenue. Cyberpunk, like I mentioned, was just released about 3 weeks ago, is already in the top 10 best gross revenue games of the year. And this is coming at the end of the year. This is insane. It's top 10. It's beating a lot of brand new games that are out in the market right now. Next, if we take a look at the most played games, this is the games with the highest peak concurrent players at one time. And look, Cyberpunk is also here. It is in the top 10. So it's not only one of the best sellers, it's also one of the highest played games right now. Again, and also another great things, if we go to Twitch, which is this live streaming platform, we can see Cyberpunk right now has about 562,000 followers for the game. So we can see people are still playing the game. People are still following the game. If we take a look at YouTube as well, the videos for Cyberpunk are getting are getting amazing numbers, right? And if we take a look, also, I want to take a look at the trend. Cyberpunk in the past 7 days, it is doing a great search report in almost all over the world, from Poland, Canada, Australia, United States, Finland. Those are the top 5 searches. And if also I take a look at what are the biggest search related to Cyberpunk, I don't see Cyberpunk refund in the first 10. In the first, yeah, I actually don't see it until probably not even in the top 25. Maybe let me reduce it. Let me do in the past. Let me do the past day. In the past day, what were the biggest searches for Cyberpunk? So for Cyberpunk, again, not even a refund I'm seeing here in Cyberpunk. So it seems like not many people. So it's telling me, hey, not many people are really much complaining about Cyberpunk as the internet is trying to show us right now. Sometimes social kind of helps amplify this noise and it kind of scares people off. And this scaring off sometimes gives us great buying opportunities. And for me, I do believe it is giving me a great buying opportunity for this company. All right, so now let's take a look at how CD Projekt makes money. So it has two main business. The first, they call it Red. This is their games that they create, like we saw The Witcher, Cyberpunk. This is where they make about 65 to 70% of their total revenue, and it actually is where they make most of their money. This segment has about 36% profitability on margins. The second market that they hit is called GOG. GOG is more like they have two segments here. They have more like an online store. If you know about Steam, it's kind of like a Steam online store platform. And this is where they make about 40% of their total revenue. But this is not profit. It is profitable right now. It makes a bit of money, but it's pretty much breaking even. So we can see their main segment makes the most amount of profitability, 36% rate. That's pretty strong for the gaming industry. And we can see their most recent revenue, they saw about 13% compared to the same time last year. Also, I wanted to show you guys their balance sheet. Their balance sheet is probably one of my favorites right now. They have no long-term debt and they have a nice amount of cash available to them. But what I'm really liking is, look, deferred revenue. This deferred revenue is most likely all the pre-orders for Cyberpunk. And I'm pretty sure those pre-orders were getting even heavier and heavier during a few weeks before the game started coming out. So I'm expected to see a big revenue growth this upcoming quarter. Yes, we are going to see some refund, but like we saw with Google Trends, it doesn't seem like many people are searching for that refund. Now, if we take a quick look at their overall balance sheet, we can see no debt at all, and they have plenty of cash available to them. If we take a look at future growth, the company is expected to grow revenues dramatically this upcoming quarter, for quarter four of 2020. Like many game companies, they do the best during quarter four, during holiday seasons, and they do even better when they release a new game. And this is what's happening with CD Projekt Red. Then obviously, they don't release a new game probably till a year or 2 years from now. So revenues start to decline until that new game comes out. And that's what we're seeing. But we can see CD Projekt Red is profitable. They have positive free cash flow. They have positive cash flow from operations, and their revenue is growing as well. If we take a look at management, at ownership, actually, ownership 31.6% of individuals still own the company. This is pretty impressive, in my opinion. The co founder owns about 12%, and then we can see some form of board management own about 6.1, and a lot of insiders are here still. The top three holders are individual insiders, which is something I'm happy to see. If I want to take a quick look at the technicals of CDR, first thing we can see is right now, if we take a look at the weekly charts, it is about to hit that 200 moving average on the weekly time frame. This to me is going to be a great support area in my opinion, and I do believe for me it is a great buy. It's also a portion where we're having a lot of strong volume for the stock. So we can see it is definitely not overextended from its moving averages. It might be a little bit underextended, right? It's being pulled back a little bit. Hopefully that rubber band effect gets to pull us back to those moving averages in the upcoming weeks. But remember, for me, I'm a long-term investor, so I'm holding this for multiple years to come. To me, the biggest risk right now with Cyberpunk, with CD Projekt Red, is obviously how quickly they're able to fix these issues. If they're not able to fix it in a timely based manner, they're already doing patches. They're gonna start seeing more refunds coming in, and that's gonna be bad. But overall, the game is doing fine. We're seeing huge success in Twitch, huge success in stream. We saw the huge growth in sales and the most played games. So Cyberpunk for me, CD Projekt Red has definitely given me a nice buying opportunity. But I do believe it will be very volatile in the upcoming days, and it's definitely not one for the weak of hands. So the second stock we're going to take a look at is One Stop System. This is one I previously talked about. This is ticker OSS and is traded under the NASDAQ. Right now it's sitting at $3.69, and in the past day it is up 16.4%. This is a stock that, like I mentioned, if you guys want to follow my Discord channel, is free to anybody that wants to join. I believe I purchased this on Monday, maybe even Tuesday. But even from Tuesday's high, this company is still up about 20%. So, like I said, make sure to follow me on Discord. I post every time I buy and sell there. So, what does One Stop System do? First, let's just take a quick look at it. Like I said, it's a market cap of $61 million. Very, very small company. Very, very risky in form of volatility. So if one thinks about purchasing One Stop System, definitely go in with a limit order. So now let's take a quick look at what One Stop System does. And if you guys want to do, make sure to check out my previous videos. I do a very full depth analysis on them. This is going to be a quick overview of them. But for those that don't know, One Stop System is one of the top 500 companies of 2020, growing at dramatic levels. So the overall One Stop System is the power of the data center at the edge when performance is needed without compromising. And the reason this is important is because right now, um, the technology that humans are evolving right now need to be able to collect collect the data, process the data, learn from the data, and act with that data immediately. So it doesn't have the time to go through the cloud. It doesn't have time to go through all these other form of loops before making that decision. It needs to act immediately. For example, in the autonomous vehicle world, in the military world, in the commercial aircraft, in the medical industry, autonomous vehicle, like I mentioned. So one stop system kind of creates these building block solutions that are ruggedized and very compact that are able to be used in different platforms. You can put them, for example, they're ruggedized that you can be using them for military usage. They're very compact, so you can put them in like autonomous vehicles or any form of small military vehicle as well. They have a lot of great customers: Raytheon, Lyft, General Dynamics, National Instruments. They have Boeing. So all big companies are right now customers of One Stop System. So like I mentioned, right, they create these building block solutions for servers, and these servers are pretty much what like Microsoft Azure uses, Amazon AWS, Google Cloud. But like I mentioned, and there's a lot of people, a lot of different companies making products like this. but not many are making it like the ruggedized system that can be used in heavy vibration systems or that can be used in a small form factor. The ones that most people create or most companies are the ones that just go into a building server where they're not expected to move, where everything's expected to work from cooling to heating and all other power. So OSS is working on a different market as well. I definitely would recommend you checking out their YouTube channel. They have a lot of great information, but remember, this is a very, very small company. If we take a look at the charts, let's take a quick look at daily charts for OSS. First thing I see is yes, this stock price is now a bit overextended from its moving averages. When I did purchase the stock, it wasn't overextended from this green line that I have right here. Another thing, it was sitting at a nice area with strong volumes. So right now, with this overextended, I would, if I was to enter a position right now, I probably would only enter with a small position to get some skin in the game. Remember, One Stop System is a very small company, so for me, this would always be a very, very small position in my portfolio, maybe like 1-2%. But the type of growth with such a micro cap company can be dramatically, can make life changing gains in a portfolio. One Stop System right now is growing revenues, it is profitable, and it is positive in cash flow from operations. Because of COVID situation, because this is a small company, the previous quarter was affected and actually made them negative cash flow from operations. But this most recent quarter, everything ended up looking great for the company, being positive cash flow from operations and being positive earnings. The company is not expected to grow too much in revenue, 6.4%, but I do believe this is underestimating mainly because not a lot of analysts are looking at the company right now. We're seeing great customers right now following One Stop System. If we take a look at their financial health, it is very good. We have to keep in mind though, they are positive in earnings and then positive in cash flow from operations. So we can be a bit lenient on their balance sheet. They have almost a 1-to-1 ratio of cash to debt, and most of this debt is the PPP loan that the United States offered is some of its small companies. They did have to take out some of those loans. Those loans are very low interest right now and due in in the long term. So even though it looks like a 1-to-1 ratio, the amount of cash that they have right now compared to the current debt that they have right now is pretty strong in my opinion. If we take a look at ownership, it is very similar like CD Projekt Red. Insiders own about 30% of the company. This is showing, hey, again, individual insiders are very bullish with the company. They're not willing to sell too many of their shares at the moment, and they're still holding, expecting more growth for the company. So to me, the biggest risk for One Stop System right now is that hey, it is a very small company, micro cap, so it is going to be very volatile. There's not much volume, so it's always important to enter with a limit buy. Since it's such a small company, I would never make it a big position. But if its gains makes it a big position in my portfolio, I don't intend to sell. Even though there are a bit of competition in this market, I do believe that they have released some great technology that is setting them aside from other competitors. And if because they are such a small company, one thing that I can see happening is them being bought out by by some other bigger company and just absorbing their technology. So these are the two stocks I purchased this week. I hope you guys enjoyed the episode. Make sure to subscribe, make sure to hit the thumbs up. Take care, guys. Have a good night and see you next time.